Hello guys, so this is one of the most requested topic, the Zimele unit trust, and I think we have a lot of people who have invested in with this fund, or many people are interested to invest with this fund. And today I want us to see why so many of you like this fund. If you already have an account in this fund, please let us know in the comment section your experience with the fund. Is it as good as they say it is? Let us know, please share. Okay, as you share that, let us get into the review. And for those who are not familiar with unit trust, a unit trust is a fund that pulls money from different investors to invest in a variety of assets. And these assets can be government securities, can be shares, can be commodities or currencies, or any financial instrument. Okay, so money market funds, fixed income funds, balance fund, special funds, and equity funds are all forms of unit trust, and these unit trusts are regulated by Capital Market Authority. And in a unit trust, diversification is a key feature, which usually act as a form of risk mitigation strategy. What this means is it is less riskier to invest in a unit trust as compared to investing in maybe a single financial instrument that is already in this unit trust. For example, it is less riskier to invest in an equity fund as compared to investing in shares. Okay, so equity fund is a unit trust, and shares is something that equity funds invest in, is a financial instrument that equity funds invest in. So basically, the unit trust diversify the unit trust usually diversify the investment to make sure you as an investor, you are not exposed to too much risk of losing your capital or the money that you have invested in that particular investment. Okay, now to the beginner investors, if you're new in the investment, this is where you start. You start with unit trust, and in unit trust we also have levels of risk. Okay, so you start with the one with the lowest risk, which are basically money market funds, then fixed income funds. After that we move to special funds, then balance fund, and the unit trust with the highest risk are equity funds. So that is like after you have already familiarized yourself with money market funds, now you can go to the next level and the next level, and the highest level now in this category we have equity funds, which are the riskiest. After that, now you can move to shares, you can move to cryptocurrencies, you can move to all the other alternative investments that are much riskier than unit trust. Okay, now back to Zimele unit trust, and the one that most people are interested in is the Zimele Fixed Income Fund, which up to January 2024 was the Zimele Money Market Fund, and in their website this fund is also known as Zimele Savings Plan. Okay, so if you want to invest in this fund, you go to Zimele Savings Plan. That is where you find the Zimele Fixed Income Fund, which was previously known as Zimele Money Market Fund. Okay, so one thing that people are asking about is why they changed the name from Zimele Money Market Fund to Zimele Fixed Income Fund. And I have to say, this is something that we are experiencing in most market or in most money market funds, because NCBA did this as well, and NCBA has a fixed income fund and not a money market. And you can clearly see this in the CME website under NCBA. You'll notice that they don't have a money market fund, but they do have a fixed income fund. So the question is, why the changes? And before we proceed, I would like to mention that this video is for informational and educational purposes only, to make sure that you understand how this fund works and what to look for when you want to invest in such a fund. It's not financial advice or an endorsement to invest in this specific fund. Please remember to do your due diligence before making any investment decision. Okay. Now, according to CME regulations, money market funds are designed to prioritize stability and liquidity by investing primarily in short-term, low-risk instruments such as government securities and fixed deposits. All right, these regulations do not permit money market funds to invest in longer-term assets like bonds. Okay, are we together up to there? So to cater to the opportunity of investing in bonds and potentially offering higher returns, because bonds have higher returns than Treasury bills, the fund managers can establish a fixed income fund. So the difference between now fixed income fund and money market fund is the fact that the money market fund, they invest in short-term instruments like Treasury Bills, while fixed income funds, they invest in long-term instruments such as Treasury bonds, okay? So in short, fixed income funds are structured to invest in a mix of fixed income instruments, including longer-term bonds, which are typically yield better returns compared to Treasury bills or short-term securities. Now from there, it's upon an organization to decide whether they're going to be able to balance both money market fund, or to have both money market fund and a fixed income fund. And as we have seen with the case of Zimele and NCBA, some organizations choose to offer a fixed income fund rather than having a money market fund and a fixed income fund. And usually what this does is this strategy allows them to focus on maximizing returns for investors by leveraging their higher yield potential of long-term bonds, while still providing diversification and capital preservation feature of this particular fund. So ideally, you as an investor, you won't feel the difference, because the way these organizations are structured, the organizations that are moving to a fixed income fund alone without having a money market fund, they have structured it in a way that it looks exactly like a money market fund for the investor. Ideally, a fixed income fund is supposed to have a lock-in period, and it's supposed to operate differently from a money market fund, but they have put it in a way you as an investor, you won't feel the difference, so that they can accommodate even those people who would like to open a money market fund in that particular fund. So all of you, you're put in the same fund. The only difference is that the fund manager invests your money in Treasury bonds as well, or long-term instrument as well, okay? And now the transition from a money market fund to a fixed income fund, as seen in the Zimele case, only reflects a shift in focus towards optimizing returns for their clients while adhering to the CMA regulatory framework. And maybe I can illustrate this using the Zimele asset allocation. And according to the Zimele fund fact sheet, they have invested 34.84% of their assets on the infrastructure bond, which could not be possible to invest if this fund was a money market fund. They also have 46.74 on Treasury bonds, which also is not possible to invest in if this was a money market fund, okay? Now that we understand why Zimele transitioned from a money market fund to a fixed income fund, let us find out who is the fund manager of this fund, how long they have been in the market, in short, the experience, and most importantly, how long the fund itself has been in the market, okay? We're also going to look at the current interest rate and see whether it's safe to invest in this money market fund, all right? So the fund manager for Zimele Fixed Income Fund is Zimele Asset Managers. And this fund manager has been in the market for a while, and they began operation in August 1998, and they were licensed and regulated by the Capital Market Authority and the Retirement Benefit Authority, because they offer pension products. And I'm planning to be talking about, or to make videos on pension products, because I believe this is a product or an investment that everyone should have. So make sure that you subscribe, or stay tuned for that. And to my subscribers, you guys, you are amazing, and I thank you for the support that you have shown me. I have people who engage with me in almost all my videos, and I'm very, very grateful, and I appreciate you so much, guys. You are just a blessing to me, and may God bless you for the support. I promise to keep bringing you content to build your wealth, and I look forward to the testimonies that you started the investment journey and now you are a millionaire. Please don't be left behind. Don't just watch my videos, also implement what we are talking about here, because that's what makes the difference. If you just watch the video and you don't implement, then what I'm doing here is not even necessary. So make sure that you implement. Don't be left behind. Let's grow together. And the difference between where you are right now and becoming a millionaire is that first step, that step of creating an account and start investing. That's what you need right now. So just go and do that, okay? Don't just watch. Please implement as well. All right, that will be my joy. That will be my happiness, okay? So back to Zimele Unit Trust, or the Zimele Fixed Income Fund. I want to confirm that, as you can see here, Zimele is licensed by Capital Market Authority, and the Zimele Fixed Income Fund is also licensed by Capital Market Authority. All right. That being said, I want to mention that the first thing before investing is to always make sure that the unit trust and its fund managers are regulated by Capital Market Authority. Okay, you can confirm this on the CMA website under the approved list of fund managers and approved collective investment scheme in the CMA website. Okay, so make sure that you check that before investing in any money market fund, in any unit trust. Now let us see the features of this fixed income fund and see whether they have changed from the way they used to look in a money market fund. This will help you compare it with the typical money market fund and see whether it's an investment that you're willing to make. And we are going to start with the investment minimums, and the Zimele savings plan or the fixed income fund retained the same minimum investment as the money market fund, and the minimum amount is 100 Kenya shillings, and the minimum top up is also 100 Kenya shillings. And you can see this is the same as most money market funds that we have here in Kenya. I think they did change this to make sure that this fund is still accessible to the beginners and to those people who want to be topping up their account maybe 100 Kenya shillings a day. And we looked at another video of what you can achieve by investing 100 Kenya shillings a day. So it's still open to investors who wants a fund like that, a fund that you can invest or you can deposit 100 Kenya shillings minimum. Yes. The next thing that we are going to look at is the fees, and joining this fixed income fund does not come with any additional cost, and the management fee is set as 2% per year, which is the same as most of the money market funds we have here in Kenya. And then the next thing is asset under management, and as of January 2025, according to their fund fact sheet, this fund has 2.95 billion Kenya shillings in assets under management, a significant indicator of how well this fund is doing or how many people are joining this fund, and it's a good indicator. Yes. And then the custodian, in line with CMA regulations, every unit trust must have a custodian to safeguard investors' money. Next, we are going to look at the income distribution and compounding. And compounding is very important because what we want is to see our money grow using the compounding effect. We say that compounding is the fifth wonder of the world, so we want to experience this with our money. We want to experience growth through compounding in our wealth, and this fund distributes its income monthly, and they do monthly compounding. So make sure that when you want to invest, you always consider whether a fund incorporates compounding as part of its structure. Well, assessing wealth building potential investments. So this is something that you should look at. So if your fund or whatever you have invested in, whether it's in a bank, if they don't do compounding, make sure that you transfer that money to a money market fund or to an investment that do compounding. Okay. Next, we are going to look at the benchmark, and the benchmark is very important because it tells you the target interest for a particular fund. And the benchmark for the Zimele Fixed Income Fund is an index, specifically the FTSE bond index and the 364-day Treasury bill. And the benchmark is essential as they measure a fund performance and provide a preference point in comparison. This is where we can observe a key difference between now money market fund and the fixed income fund. For money market fund, the benchmark is typically the 91-day T-bill, while the fixed income fund use longer term benchmark like the 364-day T-bill. And usually the 364-day T-bill has a higher interest rate than the 91-day T-bill. And based on this, the fixed income fund are expected to deliver better returns than money market funds, as they can invest in longer term instruments which offer higher returns. Next is the most exciting part of any investment, and this is the performance. And according to the Zimele reports, the fixed income fund delivered a return of 14.89% as of January 2025, which is below the benchmark of 16.13%. And this indicates the Zimele Fixed Income Fund has a potential for improvement over time, because you can see that their benchmark is higher than what they delivered in 2025. And because the 14.89% were the returns for January 2025, I think it's also good to include the current interest rates. And you can find these in their website. So as of April 2nd, 2025, the current interest rate is 13.40. That is the daily yield, all right? And it's also important to note that the 14.89% I shared for January 2025, these returns are gross of management fee and withholding tax, meaning that they have not deducted the management fee, which is 2%, and the withholding tax, which is 15%. So for the effective yield or the effective return, it will be lower than this when you deduct the management fee and the withholding tax. All right. Before we conclude this video, there's something very important that I think we should be including in our reviews, and that is the inflation rate information, so that we can make sure that our investments are beating the inflation rate. And this way, we can assess whether we need to move our money to a better investment or stick to the ones that we already have. So I got this information from the CBK website, and these are very important rates that we should keep in our mind, especially the inflation rate and the lending rate. The lending rate is important because it reminds you and me how much we will be paying someone else if we decide to take a loan. Make sure that when you take a loan, it's for a project that will be bringing you income or cash flow. If not, you are making a very big mistake. 16% is a very high number or a very big interest to pay. Even money market funds are not giving us that much. And allow me to share something that someone once said that made so much sense when it comes to loans. They said that a bank will only give you a loan if they believe and they know that you're in a position to afford that loan. So if you cannot afford that loan, you are not given that loan, meaning that if you give yourself some time, you can be able to accumulate that kind of money by investing. So make sure that you reevaluate that loan decision that you want to make. Make sure that if you're taking a loan, is for a project that will be bringing you some income or cash flow. If not, you can take your time and invest that money and buy whatever you want at a later date, instead of paying the 16% per annum as interest. Think about it. And guys, I don't know whether it's just me, but paying a debt is usually so painful. Why is it so painful? I don't know why it's so painful, and I don't know whether it's just for me, but every time I have a debt to pay, I feel so much pain in my heart. Is it my heart? Yes, I feel so much pain that I don't know. It's just painful. And I usually think, especially when it comes to the small debts that we take here and there, especially in the mobile loans, when we take those debt or that small loan, it's like you're spending before you earn, or you're spending before you get paid. And this is a habit that I've seen with so many people. You say that, for example, you're expecting some cash next week, and you tell someone, kindly, can I borrow? Or you go to a mobile app and you borrow, like you're borrowing because you're expecting some money. And then you get to a cycle where, because after you borrow, when that income comes or when that money comes, you're going to pay this debt. And then after that, you'll be in need of money. Then you'll borrow again, and you'll be in a cycle of borrowing and paying as soon as the money comes. And remember, you're paying with interest. So whatever you're paying is not the same as you are spending, because you're paying with some interest on top of it. I know sometimes life happens and we find ourselves in such situations, but let us avoid getting into debt, because it can ruin you. You'll never be able to accumulate anything. You'll never be able to invest. You'll never be able to save, because you are always in debt. You are in a cycle where when you get paid, you pay a debt, and then you get another debt. And sorry for taking that detour, but I feel that it is important to say such things or to get into such details, so that we can remind ourselves that what we need to do is to focus on investment rather than in debt. If you have a debt, consider making sure that you're paying it, and focus on now investments, building wealth instead of getting into debts, okay? And for those who are looking to invest in Zimele Fixed Income Fund, I hope you got your answers in this video. If you have any more questions about this fund, let me know in the comment section. I'll be glad to clarify. And in case you're looking for other places to invest in addition to your money market fund, consider watching this video that I did on 6 alternative investments that offer higher returns than money market funds. Thank you so much for watching. Thank you for the support. See you in our next video, and happy investing. Bye.